Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we will update our view on the Great British Pound. So, in two words, the fundamental background for the Great British Pound is negative, and we will not be surprised the market will drop back to the previous lows by the end of the year around 122, 124 area. In the short-term perspective, within the few weeks, we will watching for nearest destination. It stands around 129, 131 area. This target is based on different patterns and fib levels. So, for example, 129 is the major fib support on the monthly chart. At the same time, this is target on the daily chart, as you can see. So this is our double top pattern, and its final destination stands at 131 approximately. So in the terms of the monthly weekly chart, it's 2 pips, 100 pips difference. It's not really big distance, and mostly we could treat it as an area around 129, 130. That will be the major destination point where the Great British Pound is gravitating to right now. Also, we are using this XLP of this ABCD, but it's not major target. As you can see, this market has passed through it on Friday, because on the double top is normal. Classical target is the distance between the tops and the neckline counted in the direction of the breakout. It stands 131 approximately. Also, you could use the 2 times extension of the ABC top D point. As you can see, double top targets 131 or 8. So usually they give the same area. That's the target that market should reach. Market is not at the oversold, guys, right now, not on the monthly, not on the weekly chart, and that's why it's relatively free space between this area and 131, 130. Also, it's an important moment how market has passed through the confluence support that we had on the weekly chart. It has happened as it's no exist, and it just shows how strong bearish sentiment of the market is. Finally, 130 is also a yearly pivot point, guys. So market was stopped by the yearly pivot resistance 1. It tells that hold is rally to the upside, or to the 140, 142 area. It was just retracement on the long-term bear trend. So it was stopped by the yearly pivot resistance 1. Now it's dropping back right to the yearly pivot point. So that's our destination point. If you would like to know the details of the fundamental background, what we think could happen, what the major problem stands around the United Kingdom economy, you could read the fundamental part now of our weekly research on the forum. So as usual, it shows important details, and you just will know more about the situation that stands in the United Kingdom right now in the economy. Technically, it also looks bearish, and as I said, on the daily chart, we will be watching for this area. On the 4-hour time frame chart, guys, we have some minor targets, minor support areas. So take a look that last time when we have discussed the Great British Pound was after completion of the OP, and in this consolidation, if you remember, we have made the conclusion that probably chance on the downward breakout looks stronger, and indeed, as you can see, market has dropped further. Now we stand in the intraday support. This is 1618 extension of the one of the tops. And here we also have this steep ABC top pattern OP target. Next target will be XOP. It's 132.17 approximately. So that's an area where market probably could show some bounce up. Personally, guys, I have no illusion on the strength of this retracement, and I think that market will show the harmonic swing. So you can see, I will show on hourly chart as well. Here market shows mostly the same minor upward bounce, minor repeats, these swings, and I think that here it could happen again, because if market hasn't shown any meaningful retracement after reaching of the weekly confluence support, what the chance that market will show any deeper retracement on the background of just minor intraday support area. So here we probably could follow the same tactics on the euro currency using the harmonic swing and watching for a bearish continuation pattern. The most common guess, guys, in the downward action when you're searching for a downward continuation pattern is, of course, Gartner's triple to sell. First of all, take a look at this hourly chart and take a look at the harmonic swings that were repeated here again and again. So the same swing. Here, the swings has become a bit greater, but it's double swing. But mostly we could use the same number because we will use not just the harmonic swing, we also will use some additional tools to estimate where the pattern could be formed. And of course, take a look at Gartner's triple 2. It comes very often as market stands down. So it means that our major combination of different tools that we could use here for taking the position is a harmonic swing, pivot points, because we know that usually retracement stands either to the pivot point or a pivot point resistance one. Pivot resistance one when the market stands in a long-term downside trend. And we should watch for Gartner's triple 2s. So as soon as Gartner's some ABC retracement will be completed, that will be the point where you could try and take the short position. Another observation that we could use here, guys, is that downside legs stands to the 1618 of the harmonic retracements, approximately harmonic. So this leads us to conclusion. So take a look at the next 1618 extension on the hourly chart stands at 132.35 and it agrees with the weekly pivot support one. Also, guys, that will be actually the XOP. It's very close to the XOP, just 5 pips difference on the 4-hour time frame chart. So it means that with the high probability, we could suggest that market will complete this target first and start upward bounce second. I just do not keep the 1618 extensions here through all the trend just to keep chart clear, but I will show you. Here's 1618. You could measure it here. You can see 1618 leg. Again here, approximately. So maybe from that point, 1618 leg. So this acceleration stands to the 1618. So it means that if market will show the upside harmonic swing, the most probable area where the chance to go short will appear, it will be somewhere around weekly pivot point. So you can see here the harmonic swing a bit greater, so maybe it will be a bit larger. But anyway, hardly market will reach the weekly pivot resistance one, and with a high probability we should get 3 points of the trading plan. So first of all, reaching of this area, completion of the 4-hour time frame chart XOP, then upward bounce in the shape of some ABCD pattern, and you could use ABCD extensions to calculate the possible target. So usually it will be either XOP minor ABCD or OP target AB equals CD. And watch for the Gartner's triple to sell around weekly pivot point. It's 133.60 approximately. That's the combination that probably could give us the chance to go short. The target of this position will be somewhere around 130. As I said, this is a strong cluster of the support areas. It's different targets, yearly pivot point, major fib levels, and so this will be the destination point for within the 2 weeks probably. So that's our view on the Great British Pound. The long-term stop here is also very interesting. It brings a lot of possibilities for trading as in long-term charts and then intraday charts. So definitely it's worth of our attention, and we will continue to keep an eye on the situation on the game.